And we have begun. Once again, hello everyone. Hope that you've had a wonderful past weekend, and a wonderful week thus far. Right, so this week, right, we'll be going live, right, today, which is Tuesday, which I already spoke about then. Thursday will be going live at the same time. So yes, we're on time, right? Not that busy anymore, right? So now we have all the time in the world. Another thing that, right, I would like to just put out there is that, right, not because, and this is for like any of you that are like, paying attention to anyone else while you're here, not because someone just, just talks and talks and talks for an hour means that they're saying anything substantial, right? If someone is, trying to communicate something that is worthwhile to you, right, they should be able to do it, very quickly, right? And I believe that that should all be done in like 30 minutes or under, right? No one should just be yapping about, things that won't help you, basically, right? Their dog and their cat and what happened to their neighbor last week and so on, right? So pay attention to where you spend your time. Do not waste your time. Your time is limited, right? And always remember that if anything is free, you are the product, right? That's just, me talking, because someone asked me a quote unquote personal question. Anyways, so here you can see that we have the economic calendar thus far, and tomorrow we have ADP non-farm enrollment change at your New York session, right, which is Q3 of the daily cycle, right? So definitely we can expect, expansion during that time, Thursday, right, which, will be used in the last 2 days of the week to gauge a reversal, right? So, just by saying that, it really does not matter which direction any market is going in. Whichever market that you're looking at, it will be reactive to this, whatever it's crypto, whatever it is, crude oil, it's, S&P 500, the FX market, it does not matter, right? This is, NFP that we're talking about. Also, you can see that we have Iran, attacking Israel, right? I believe they're doing so as we speak. There are hundreds of rockets, right? Something that, we haven't seen in a while, right? Some people say that, this has been going on forever. Not at this scale, right? Not with this tension that, you have almost every, large or higher power nation, taking part in, right? They're taking sides, the sides already. We talked about this 2 years ago or 3 years ago, actually, right before any of this even came to fruition, right? Anyways, with that being said, that right now it's not that just that the risk is high, the risk is always high. It doesn't really matter, right? All you have to do is follow, right, the rules that we lay here for you to be able to gauge the direction of price action, right? And if you're wrong, it does not matter, right? You have a stop loss for that reason, right? And we've been right for, I believe, the last 2 or 3 weeks, right? I think it was 2 or 3 weeks, right? And just because, right, that happens, and even if we're right this week, if we're right next week, right, you should never, try to put all your eggs in one basket, meaning that you should never try to trade in that direction all of your risk, right? Never do so. That's a terrible way to, that will probably end up having your account blown whenever we're actually wrong, right? So yes, Wednesday, Hyper News event. This really doesn't matter, to be honest, right? Only ones that matter are like NFP, CPI, right, and FOMC, right? And the reason why those matter is that it's just that larger amount of liquidity will just be injected into the marketplace. That's the only thing, right? These names just does not matter, right? The reason why we chose to not go live Monday was due to the fact that, this is something that is, what I would say, it's not something that repeats itself where you have the Fed just, deciding to go, and speak on a Monday, just as the market is open, right? And, surprisingly, this happened, right before those, or, quote unquote attacks, or, whatever begun to happen over in the Middle East. So yes, Thursday and Friday is where we'll be looking for the high and low of the week, for, majority of the asset classes that we focus on. Friday should be, or, give us something to work with. Thursday as well. So here is where we will be discussing or, introducing, something that no one really, knows about. The basis of what we're looking for here, right? But the concept will, the concept will be used to, get out of or understand when you will have just a large leg move in consolidation, right? So I dub it as the distortion shift, right? You don't really need a gap or anything of that sort. Would it be helpful to have one? Yes, it would be helpful to have one, to have a gap there for price to, react to, right? But it's not needed. What is it used for? To gauge direction, to gauge directions in low probability conditions, such as here where you see we have the US dollar right here, right? At those lows for the US dollar, what can you see? You can barely see price wick, right? Right here, you barely see price wick below this low right here, right? So here, you can see that clearly right here, price wick below this low, right? But as you guys know, right, what do we usually look for? We usually look for price to close. It didn't close below this low, right? So price failed to close below this low, but it did wick below this low, right? Okay, let's move on to the euro. Here you can see that price closed above this close right here, but it did not, the wick did not go above this wick, right? So right here, you can see that we have, conflicting ideas within the price action, right? So this is typically, what you would see, and you'd be like, Dave, what do I do when I see something like this, right? When you see something like this, right, and it's very simple, right? You see something like this. Once you have this first wick, right, this, you don't pay attention to it, but you pay attention to it here, but you don't give it your full attention yet. After this, you need to see sequential SMT. So here, right, where you have this happening here, and then here you have price wick below, right? This does not need to be sequential, right? Where you have the wicks, right? So price wicks here, this close happens here, right? And on the lower time frame, which is the, so this would be the 1 hour time frame. What would you see? You see a position swing point somewhere around here. I'm pretty sure that you will, right? 100%, right? So here we see price fail to break below this low right here. Here, you can see that price did break above this side. Meanwhile, all of this is going on. If you pay attention, right, price did not go below this low, and here price did not go above this high, even after breaching this high again, which, created sequential SMT. So here we'll just go and look for, right, we'll just go and we will just look at the 1 hour time frame, right? So here, right, and between this high and this high, right, there is a level that, is created, which, operates as how you would like to see a quote unquote gap operate, right? Just rejecting price action. So here, price traded above this high. This was sequential SMT. This is the Monday model, right? That we love so dearly, right? What is that? When you have sequential SMT between Friday and a Monday, right? This is what it is. So yes, we had price trade above this high, which is Friday's high. So this is what, gave rise to this, movement, right? And also, right, something to always take into consideration is that you always want to have somewhere where, price will move to. Price will be gravitated to, like these lows right here, right? These lows are too clean, right? And I'm pretty sure that you have some, form of new week opening gap here as well. Actually, okay, there it is, right? So when you have all of these things overlapping, right? So here we had, even, without looking at, paying attention to the distortion shift, right? We had what? And what completes the distortion shift? First of all, you have to be in, yes, what the name suggests, distortion. Price should be in a tight range, right? You have price wick below here on the forward time frame. It's a wick here. It's a close, right? Price trades below here on the forward time frame, but here on the 1 hour, what is it? It's a close right there already. What is that? That is also a cracking correlation. So here we have price, on the forward time frame, the 1 hour time frame price closes below this low, but on the 4 hour time frame, this is not a close, it's just a wick. Do you understand? Meanwhile, we have this happening here, right? Price trading below this low, and here we have price failing to trade here above this high right here. The main thing to take away is what? The Monday expansion model, where you have Friday's high being left right here. Then, we have here price leaving the new week opening gap. And once this happens, price trades above here. What happens? Right between Monday and Friday, we have the revolving true open. Right. So the revolving true open would be what in this case? The new week opening gap. Price trades above the new week opening gap. Right. Then it goes here, trades back, and gravitates to these lows right here. So that's just an introduction, right? Anyways, here you can see that we had price, absolutely to exactly what we wanted it to see, wanted it to do, right? So here we had price trade above this high. This is the E-mini S&P, right? Then it, it took time before it fell to our profit target of this low, well, all of these lows right here, right? Remember we talked about this, right? There was no, price was literally here, and wanted to see price above this high, then just drop and take all of these lows out, right? Here for the NASDAQ, as you guys, can probably remember, right? We were focused on this gap right here, right? And remember what we said, right? Whenever you have, for example, you have prices at all-time highs, right? You already have price trading above this high. So price is already at all-time highs here. And this is how, you can have a quote unquote easy way of, knowing what price might do. So here price was trading above all-time highs already, right? While price was here below this higher time frame gap, or this 4 hour gap. Actually, it's a balanced price range right here, but you can just use the gap for, my entry purposes, which you guys, saw, right? It was obviously this, which most of you guys, already know. Here we have the balanced price range. So here we have this gap right here, right? Price traded above this high. Price was already above this high. So it was easy for us to know that price would, be rejected here. There was nothing here for price to reach to. So what was the triads, right? What were they waiting for? The S&P 500 and the Dow was waiting for the NASDAQ to trade into this gap. How do you know that? How can you even, sit down and trust that that would happen? Due to the fact that there was nothing else for price to react to. And for price to, go lower, what's the main thing that you need? A sequential SMT or SMT. That's what you need. Here we have SMT. right? And yes, so yes, if we go again and we drop down to the 4-hour time frame, right, looks a bit clearer, right? So here we have the opening of the balanced price range. This would be the fair value gap. If you remember what we said, when you have a balanced price range, right, within a fair value gap, then, price would more than likely react to that, which it did, right? We had all of our targets hit, almost perfectly. Well, actually, it was perfect. The main thing, right, which caused price to, go lower was what? Guess. Sequential SMT, of course, right? Between which days of the week, right? So first of all, if you guys remember, we wanted to see, Thursday, place the high of the week for most asset classes, which it did right here. And let me get this right here, right? Which it did right here. So we had this happening Thursday, but here Friday was the high of the week. So we had this occurred between, the days of the week, due to the fact that the sequential SMT, right, did not occur between, the quarters of the week, right? It occurred between Friday and Thursday, right? So that was what doubling theory into play, right? So here we have price trading above Thursday's high, right? Here we have price failing to break above Thursday's high, and the same thing here, which is, what led to price dropping lower. Right, so we expected what? We expected expansion, which we did get, to, trade into the, or rebalance the weekly gap that we had here for the NASDAQ. Here, there was nothing here to work with. Remember that. But we still expected lower prices. Here, there was nothing as well. But we got what? Sequential SMT. What was the main thing that allowed us to gauge that we might get sequential SMT right here? It was the fact that there's a gap here for NASDAQ, right? That's the main thing. That's the main reason why we expected lower prices. And here as well, you can see that we had price draw to this high, right? And remember that we had these lows in mind, right? Which meant what, right? Price went above here, we wanted to see price return to here, or this was the main drawn liquidity, but also this was a drawn liquidity as well. We did highlight this, right? Or we wanted to see price drop below here and then, continue higher to breach above this high. And it's, it's crazy how, I have to say this, it's crazy how, it's when we have a unforeseen event happening, like a quote unquote black swan, something that you shouldn't be able to predict, right? It's always in line with price, right? Every time something happens, price, basically dictates. Well, yeah, I don't know if I should say like that, but whatever. So it's what I think, right? Price dictates what happens, right? So if it's underway in price, then it will, come to fruition in, our actual real life, right? And also here you can see that we have the larger time frame, right? We have these lows right here, right? So I'll draw them out so you can see. And remember that we do not, this tiny, wick below here, we do not consider it as a run on liquidity. I could even move it, right here. You can see that these are actually equal lows, right? Right now, what do we have? We have price in between. Well, price is pretty indecisive at the moment, right? And when it's not indecisive, we talk about it, right? This is how here we expect the price to go higher to this gap. Literally, that was what it is. We expect the price to go higher to this gap. When price was here, we expect the price to shift lower. So here we have price in between these gaps, which is, funny that we have, high impact news events this Friday, right? It's funny that we have the non-farm payroll this Friday, right? Isn't it? Don't you think? What will be the purpose of that, right? And it will be easy to read the direction as always, right? As long as you see sequential SMT either 30 minutes, fully formed 30 minutes before or after, then price will just go in that direction, right? So whichever it is, right? So it's a 1 hour time window, 30 minutes before the news or 30 minutes after, right? That's what it is. So here we have liquidity below this lows, and here you can see that between, from this high and this high, it's pretty close. So right here, we're just within consolidation, right? And due to the fact that, and this does not mean that, it's going to be harder to trade in any other time that it was, but, you should be cautious in these conditions, right? Very cautious, right? Where you have no gaps for price to be drawn to, right? So here, we expected price to be drawn here. It was drawn to this gap. Then from here, we expected price to be drawn here, right? To this gap as well. So I hope that you found this useful. We will be back Thursday. I hope that you study this one. And remember that, right, I give you everything as it is. I'm not going to, beat around the bush, try to add a extra 20 minutes on something, to waste your time, right? I need you to get it. I need you to understand what we're looking at. I need you to completely, understand what's happening within my brain, right? As I try to transfer the knowledge to you. With that being said, right, I hope you found this useful. We'll be back here Thursday at the same time, right? Exactly at the same time, right? With that being said, I wish you all a good day, good luck, and good trading.